Canopy growth, weed stocks. Is this the stock to buy? If marijuana gets 100% legalized in the United States, are we going to make a fortune buying ticker symbol CGC? Well, I have my thoughts, and we're going to discuss them now. Welcome back to Strongman Personal Finance. Canopy growth is up 22% in the last trading day, and people are getting very, very, very excited. Why is the stock up? Well, as always, some kind of positive news came out about cannabis legalization and improving the ability for people to manufacture, sell it, and whatever with cannabis. Here's a news article I pulled up that says that President Biden, our president here in the United States, threw his support behind legalizing medical marijuana, which Canopy Growth sells. On Wednesday, Senate Majority Leader Chuck Schumer, the New York Democrat, that's a wonderful thing to call yourself, said he hopes to make progress on passing the Secure and Fair Enforcement Banking Act, which makes it easier for marijuana businesses to access banking services. So the thought behind cannabis investing is that, right now it's regulated and, it's a Schedule I drug in the United States. And these companies have a terrible time staying profitable because they pay insanely high taxes because they can only deduct their cost of goods sold on their tax return. But once legalization comes around, companies like this are going to explode. Well, let's dig in a little bit to the financial statements and see, assuming, and this is a big assumption, full legalization happens, is this company going to deliver positive returns? Does it have positive fundamentals? Well, let's go look at the financial statements. So the first thing I like to look at is revenue growth. How is the revenue of this company doing? For a, interesting company that people are looking at buying, their revenue growth is absolute garbage. They had a steady increase in revenue from 2016 all the way till about the end of 2020. And then things started to go south. Revenue has been on a steady downtrend ever since the end of 2020. We're coming on the end of 2023. That's not so good. We go down and we look at gross margins. This is their profit simply from selling the weed. This is not including selling general and administrative expenses, interest, and taxes. This is simply them manufacturing or buying the weed and then reselling it. This is the profit from that. They don't make any money on the top of the income statement. So even if they completely legalize weed, this company is basically selling the weed for less than it costs them to grow it or buy it. That's not good. So even if this was a fully legal substance, from the top of the income statement, they're not making good margins. You go down to operating margin. Massively negative. This company is losing money hand over mother effing fist. Profit margin, negative, negative, negative. Free cash flow, negative, negative, negative. We'll look at the balance sheet on their actual most recent financial report. Let's look at trends in cash flow. If we look at their cash flows from operations, this is the core function of their business. They spend money to buy or grow weed. They collect money to sell it. They pay their employees. This is all the cash that shows up on that side of the business, the core operations of the business. They've never had one single quarter in the past, 5-6 years of positive operating cash flow. Negative operating cash flow for the past 5 or 6 years, and probably forever. Capital expenditures, it looks like they're actually divesting of some parts of their business. Acquisitions haven't made any recently, at least as of the date of this report. Let's go look at financing cash flow. Financing cash flow is how a business raises money. Basically, they borrow debt or they pay it off. Those both show up here. Or they issue shares or buy back shares. Those both pop up under financing cash flow. Let's look at debt issued and paid. Check out the pinned comment below and join our Discord community where you can ask me questions directly via text. And if you sign up for the highest tier, you can actually meet me in person every 2 weeks. So check out the pinned comment, join the Discord community, and let's make some money. So they took out a huge amount of loans in the first quarter of 2021. and they really haven't paid any of it back. I wonder when those loans are due. We look at share issuance. Oh my God, they're not buying back shares. Of course, they're not making any money, but they've consistently issued shares. They actually raised an insane amount of money. It looks like $5 billion back in the last quarter of 2018. So this business is massively losing money from operations. They don't even make a profit on the top of the income statement, much less the bottom of the income statement. And they basically packed on some debt. They've paid some off, cool. But overall, they've packed on a ton of debt. Now, let's go look at the balance sheet. Let's go see what's going on with this company's actual balance sheet. I like to look at this instead of the website that we just looked at because it's a little bit more clear. Now, if we go down the balance sheet, let's check it out. So we can see between March 31st, 2023 and June 30th, 2023, their cash has gone down. It could have gone anywhere. But we know they definitely burned some cash in operations, but all the cash, it may have gone to multiple sources. Short-term investments has gone down massively. They probably sold those to pay their bills because they're not making money. Restricted short-term investments are down. Accounts receivable is actually up. Now, it could be a timing issue, or it could be an indication of improving sales quarter over quarter. You'd have to go back and look. But I guess quarter over quarter, they've grown their receivables, some money their own. This is money they're going to collect probably in the next couple of months. Inventory has roughly stayed the same, and prepaid expenses has gone down a little bit, but nothing crazy. Next, we see these other financial assets. Now, if we go and see what that is, we go down and we look at the notes of their financial statements, if we can actually find it here. Thought it'd be easier to find than this. Here's some of their investments, okay? They have all these purchases of all these different entities. It looks like other weed companies. Acreage, TerraSyn, Wana, Jetty, blah, 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 blah. These are all investments. They have options. They have exchangeable shares. They have warrants. They have loans receivable. These are all classified on their balance sheet as investments, other financial assets. So we can see quarter over quarter, they've had some increases. The fair value of a lot of these assets has increased overall by about $65 million. It's been hampered a little bit by currency translation adjustments. But overall, they've, quote unquote, made some money in changes in fair values of the financial assets that they've owned. But let me tell you what, I guarantee you, without even looking at any of these other weed businesses, that they probably popped up massively in 2020. But overall, in the long run, I bet you they've lost a hell of a lot of money on these investments. So these are not very, to me, not very great investments in the case of Canopy growth. But we'll see how those shake out. They got property, plant, and equipment. It's gone down a little bit, probably depreciation. Could have been some sales. Intangible assets, patents, trademarks has gone down a little bit, probably amortization. Goodwill. So Goodwill has gone down from the last quarter. Why is that? They either it's a foreign currency translation, which happens sometimes, it sometimes changes the goodwill, or they recorded some type of impairment, which means they had to write down the value of a business that they had previously acquired for whatever reason, probably because they bought a bunch of trash, okay? So overall, their total assets have gone down by about 300 million Canadian dollars. Okay, let's compare their short-term assets to short-term debt. So they have 883 million of short-term assets, mostly in very liquid assets, versus current liabilities of 451 million. Overall, they can pay their short-term debts, at least within the next year. They have sufficient liquidity to pay off their short-term debts. I don't think they're going bankrupt anytime soon. What I would be more concerned about is this long-term debt here. So they have all this long-term debt, right? And what do they use this long-term debt for? Well, we see they have property, plant, and equipment, okay, but that's a lot less than their long-term debt. And we see their largest long-term asset is other financial assets, which we talked about earlier, all the other investments in those other weed companies. So basically, they have a ton of long-term debt, and they have basically a bunch of financial assets and a little bit of property, plant, and equipment. I wouldn't be too comfortable with that. I'd rather see long-term debt be a lot less than property, plant, and equipment, because these things seem like a bunch of turds, in my opinion. So overall, their liquidity is fine in the short term. They're not going to go bankrupt within a year, I don't think. Things can always change. Long term, when you compare long term assets to long term liabilities, I don't like the fact that they have more long term debt than property, plant, and equipment. And their largest long term asset is basically a bunch of crappy investments in crap companies. Now, here's the funniest part about this whole business. We look at the equity section of the balance sheet. Their shareholders' equity has gone up. So their assets have gone down, but their debts have gone down faster. Where is all of their equity coming from? Where are they increasing their equity? Is it from business profits? No. What's it from? It's from share issuance. That's right. All of the equity, the only reason they have more assets and liabilities on their balance sheet is because they've issued stock and issued stock and issued stock and issued stock. As a matter of fact, in 3 months, their shares issued increased to 626 million from 517 million. That's like, what, a 20% increase in shares in 3 months? So can somebody explain to me why you'd want to invest in this? Even if you thought there was going to be full legalization, they're not making any money at all. As a matter of fact, this is probably one of the worst weed companies I've seen. They're insanely unprofitable. So when you look at this company, right, and you're like, oh, well, the stock price went up. I mean, look, bro, what's up 22%? Even if there's full legalization, the business model is broken. They're losing money hand over fist. And legalization will not change that. In the long run, this business will eventually go bankrupt if things don't change. I can 100% guarantee it, because if you're losing money and losing money and losing money and losing money, eventually the market will wisen up and say, hey, why would I lend money to a business that can never make money? Or why would I buy new shares issued by a business that isn't making money? The market will wise up. What it really depends on is, will retail wisen up? That's it, ladies and gentlemen. Good luck if you want to buy this, but out of all the weed stocks, this is probably not the one I would buy. Cheers!